Welcome back to Main Station. So, yes, I'm recording. This video I'm going to talk about usual big US stocks, Amazon, Tesla, Google, and Apple. I thought about hitting Twitter too, but I might make a separate video about it. I already did, and I don't know, maybe I'm making like 2 videos out of these 5 at Twitter. 2 videos about them, depends on how long I'm rambling on each of these stocks. So, yeah, to get started, this is Amazon. And this is, in my opinion, the least interesting looking for now. You can see we have some copying price action, but basically this high is just very irritating in my opinion. We now have higher lows, but basically trading range is king, and this might also be the title of my video. You can see we are getting tighter and tighter. This is the 4-hour time frame, also on the daily, of course. Very similar, but just a bit more choppy. And yeah, so we are basically still in lower lows on the daily and lower highs, so nothing too excited or nothing too exciting. What does look interesting, or what is interesting, is that we are now getting very tight in this range, and you can basically draw some lines and see that we are in equilibrium since early February. We are in an equilibrium on Amazon, and so you would look for that to break in either direction. And well, I think it will break bullish, but this is just a bit too unclear for me to either tell in which direction or tell how strong and in which direction it's going to break. So I think I'll stay away from Amazon for a little bit. And you can see also our ADX is basically not trending at all for now over a month. We haven't been trending at all on Amazon. So, well, we are due for a trend, and well, I think it will break bullish, or at least this is my inclination. So, but that's also all I'm going to talk about this trading range. And yeah, so moving on with Tesla, a bit more interesting price action. I think if we look at it on the 4-hour, then it will be a bit more clear. Yeah, so we had our bull run, you could say, from a low right here, and we came back down. I expected this to have at least the possibility of a bigger bear flag to play out. Then after we had this bull run, we had an equilibrium, very clear. I actually had the inclination of it to break bullish. You can see we had very clear high lows and very nice lower highs. Well, it broke bearish by breaking basically this low. This was our call. You can see, or our call, this should have been a sign that we are bearish. You can see we broke, consolidated, and broke again, and then a bit more with a bit more bear volume. And now we have increasing bull volume. So you can see also we broke out of our lower highs on the 4-hour and out of our lower low, or we are now attempting to make a higher low, basically with this trading candle. Look, and looks on the daily like a hanging man, so this could be a bearish sign, but still on the 4-hour I expected this to, well, I didn't expect it, but I drew this line on top just in case we might see a higher low and then maybe a higher high to confirm a bear flag, or to confirm a possible bear flag. Although what I think will be most reasonable or likely is if we see a bearish scenario, or what I think the most likely scenario is now going to be, is that we find resistance right here. Maybe you can consolidate for a few days, at least, of course, in mid next week, or at least early next week, and late next week we could see a break in our direction. But I think this channel on the top, this descending channel, could be playing out for a longer time frame, or for basically a longer time. And what I would expect is that we hit this trend line, confirm it with third touch, and then come back down, maybe even create a double top. This would still work with early next week for it to trade. Hit it, come back down, and find a higher low compared to 28.8. Maybe our pivots will show our low. Or this is volume. Oops. No, it doesn't. Right, nice. Okay, whatever. So create basically a double top with 323.98, and come back down, or just be basically a little bit down, but have some sort of an ascending triangle, or at least an equilibrium, which is a bit more to the bullseye, since we are nearer our highs in this equilibrium than to our lows, at least for now. And then we'll hit it, come back down, create a higher low, and then move into a bigger equilibrium, which could be a bullish sign for the longer term, or at least midterm. But I think longer term it does look reasonable if this will break bullish. Still, an equilibrium is very neutral. It usually depends on which trend has happened recently before the consolidation time frame, or the consolidation space. And well, this still has the possibility to move into a bear flag, but I think this trend line could be confirmed in the near future, and then confirmed, and then we see it come back down and move into bigger equilibrium, and maybe see a break then. Still, this is a trading opportunity, or of course with this high and this trend line you could enter bearish. I don't like this too much to enter upon such heavy resistance and line of resistances, since they either could be broken and then with very significant volume and see a nice follow through. But I would prefer to wait for confirmation that we are going down, and then to enter upon that move. So yeah, we had this descending channel, basically could be looked at as a falling wedge, but moved quite nicely. And my prediction of this right here, well, I'm usually too fast. I should adapt this in my predictions, but it still could play out. Basically, don't touch here, but touch here, and don't see a bear flag. I think the likelihood that we don't see a bear flag and we see an equilibrium is more likely right now. So I think that's it for Tesla. Moving on to Google. This might be one of the first times, or very rare times, I say that Google looks interesting, because I told you that I don't like this choppiness, but this is actually very clear, and we haven't had this for a long time, in my opinion. You can see this choppiness, high, lower, low, back and forth trading, big candles, small candles in between, bigger gaps all over the place. But now we are in a very clear equilibrium. You can see how it's trading right here. Now I don't have to draw lines. This is clear. We are in a constellation move right now. And I'm going to do the... Whoa, okay, this is not what I wanted to do. Interesting. Well, but I wanted to delete the Fibonacci, so I did delete the Fibonacci. Yeah. Well, yeah. So we had our more or less, we had our trading channel, an ascending channel. And usually when ascending channels do not break bearish very significantly, they move into equilibriums. And these equilibriums can move out of these channels. Usually also, or usually by confirming the ascending channel or descending channel, but the trading channel with some touches of it after breaking the line, either line up or top, up or down, top or down, top or bottom, whatever. You know what I'm saying. Confirm a line of resistance or support, and then instead of breaking further into either direction, they move sideways, and this could be playing out right now. We have seen multiple touches of this downward trend line. You can see it very nicely on the 4 hour and basically also on the daily. It's just very clear. And yeah, this is a very clear equilibrium trading channel or trading area. We with our high, low, lower high, high, low. Now we look like we are attempting a lower high right now. Use these. Basically, this is now our trading range, and I would expect to see this play out like over the next week, and maybe even see a break next week. But I think in the week after, it's more likely. And I'm now a bit more conservative or a bit more patient with my predictions. So if this breaks bullish, and I think it will, if it does, or if it breaks, I think it will break bullish, and it will break. It's trading. It will do some. It will do some things. So I want to. Oh damn! I start to recognize that I have to take a shit right now. So okay. Maybe like this is 18th March. This is too far, but maybe see break sometime like this, then see it move back up to these highs after breaking our equilibrium, and this can actually play maybe even like this, like from here, from mid-March. So where are my indicators? There they are. What is this? What is this? Interesting. Oh, I know what this is. Whatever. Not too important right now. We still have the chance to come back up right here. Have a double head and shoulders, and see this very big possibility for head and shoulders be playing out, and then see a hardcore dump like this, like in a few days. See just multiple weeks and maybe months of price action just wiped out. I think this is fucking amazing when shit like this happens. But yeah, so very clear equilibrium on a daily time frame. My opinion, very bullish inclination. A break of 1135 is bullish, and after that we would look for it to break 1147, and after that see a move back up to our highs around 1177 or lower lower 1200s. But I think this is a bit too bullish to see lower 1200s. You can also take the width of the trading pattern and predict it upwards. And this would set us basically for lower 1200. So, well, we'll see. But yeah, looks quite nice in my opinion. And our trading channel is confirmed by sideways action, which I think does confirm trading channels like we've seen on the S&P with our falling wedge has been confirmed. But the sentiment or price action was so bullish that it didn't broke down and hold the price or hold its level. So finishing off with Apple, and this is interesting, or in my opinion, Apple looks the most interesting in the short term, because this is basically a textbook cup and handle. And we are now forming actually a cup and handle in a cup and handle. So you can see this is a 4-hour time frame. And we had like basically cupping price action, not too exact, but still